Welcome to today's stock market news update. Let's start with precious metals, where gold and silver are making headlines. Silver is surging, breaking above $40 for the first time since 2011. Gold prices have risen to record highs to over $3,500 per ounce, likely driven by expectations of rate cuts and rising inflation. In fact, gold is now trading at over 100 times its 1971 price of $35 per ounce. Gold has become the world's second largest reserve asset, overtaking the euro last year, and it's experiencing historic demand levels. Gold's share of global international reserves climbed 3 percentage points in the first quarter of 2025, reaching 24%, the highest level in 30 years, marking the third straight annual increase. At the same time, central banks' direct holdings of gold have now surpassed those of US Treasuries for the first time in about 30 years. On the debt front, US household debt reached a new all-time high of $18.38 trillion last quarter, a figure that includes mortgages, credit cards, and auto loans. This level of borrowing could signal consumer confidence or strain, potentially affecting spending and economic growth. Serious credit card delinquencies, where balances go unpaid for at least 90 days, have climbed to their highest in 14 years, highlighting possible financial stress among households that might ripple into banking sectors. Margin debt in the US has jumped to a record high of $1.02 trillion, meaning investors are borrowing more to invest in US stocks and could heighten market volatility if conditions shift. More than 20% of mortgages now carry rates of at least 6%, the highest in over a decade, adding to borrowing costs that could influence housing and consumer decisions. Speaking of consumer debt, 7-year car loans now make up 21.6% of new vehicle financing, an all-time high that's doubled over 8 years, while 5-year loans have dipped to 18.5%, with average car prices up 28% to about $50,000 in 5 years. Longer loans help affordability, but often leave borrowers underwater when trading in, pointing to rising risky debt that could impact credit markets. US homes are getting smaller, with the average new home size dropping to 2,404 square feet, the lowest in 20 years and down 12% over a decade. Meanwhile, median prices have risen 38% to $403,800, pushing the price per square foot up 57% to a near record $168. This squeeze from inflation and costs could worsen the affordability crisis affecting real estate sectors. Home purchases are being cancelled at a record rate, according to Redfin, which might reflect buyer hesitation and could pressure housing inventory or prices. In response, US Treasury Secretary Scott Bessent has indicated a possible declaration of a national housing emergency, recognizing a crisis where prices have soared 50% in 5 years due to supply shortages and zoning issues. This could lead to deregulation and faster building, potentially easing costs in high-price areas and addressing voter concerns. Turning to energy and tech, the AI revolution is pushing electricity prices sharply higher, with US rates up 5.8% year over year, largely due to data center consumption. In California, prices have risen 68% over 7 years, per Bank of America data, positioning energy as a new bottleneck for AI growth that could influence utility stocks and tech expansion plans. Now let's look at international economic updates. Canada's current account deficit surged to a record 21.16 billion Canadian dollars in the second quarter of 2025, up 19.84 billion Canadian dollars from the previous period. The increase was driven by a 13.1% drop in goods exports, the lowest since 2021, and a record goods trade deficit of 19.6 billion Canadian dollars, largely due to weaker shipments to the US. Record capital outflows could pressure the Canadian dollar and trade relations. China's housing slump is worsening, with new home sales from top developers down 17.6% year-over-year in August to 207 billion yuan, one of the lowest on record, and the sixth straight decline after July's 24% drop. On a brighter note, India's economy grew at a faster than expected 7.8% in the June quarter, fueled by lower inflation and strong corporate earnings, which might boost emerging market sentiment. Turkey's GDP expanded 4.8% year-on-year, its fastest since early 2024, potentially supporting regional stability. Italy's unemployment rate dipped to 6%, the lowest in 18 years, while Greece's fell to 8%, down from 24.5% a decade ago, and the lowest since 2008. These improvements could enhance consumer spending and Eurozone confidence. In the UK, debt has climbed to £2.7 trillion, about 96% of GDP. Interest costs are projected to hit £111 billion this year, meaning roughly £1 out of every 12 the government spends on interest. At the same time, 30-year bond yields have surged to 5.64%, their highest since 1998, raising concerns about budget pressure and investor demand. Germany's 30-year bond yield has hit a 14-year high, France's have risen for 4 months near multi-year peaks, and Europe's overall debt costs are climbing, which could increase borrowing expenses across the continent. Moving on to tariffs and trade. Most of Trump's global tariffs have been ruled illegal by a US appeals court for exceeding authority, but are currently still in place during review, with an appeal likely heading to the Supreme Court. If the Supreme Court rules against Trump's tariffs, it could lead to refunds and shaking trade policies. President Trump posted on Truth Social claims that tariffs are attracting over $15 trillion in US investment. He warns that ending the tariffs could end those investments and harm the economy. In a separate Truth Social post, he stated that India has offered to cut its tariffs to nothing, and noted the US does little business there, while they do tremendous with the US. This comes as Indian Prime Minister Modi met Chinese President Xi in China, where Xi noted they represent 3 billion people in a changing world, and called for the dragon and elephant to unite. Russian President Putin also joined, suggesting a stronger BRICS alliance amid US trade tensions. Modi called the talks fruitful, potentially influencing global alliances and markets. Brazil is hosting a virtual BRICS meeting on September 8th to discuss US tariffs. India's Russian oil imports are set to rise in September, defying US pressures per Reuters, which could test sanctions and energy flows. US inflation remains in focus. July's personal consumption expenditures, inflation rose to 2.6%, matching expectations, while core PCE hit 2.9%, also in line with expectations, but the highest since February 2025. As the Fed's preferred gauge, this could guide rate decisions and bond yields. Despite 74% of world central banks cutting rates in 2024, with 15 cuts in May, 2025 alone, yields are at 30-plus year highs, blamed on rampant deficits and resurgent inflation, meaning higher rates persist and could challenge borrowing worldwide. Now, for key market data, the Atlanta Fed's GDP now forecast rose to plus 3.5% from plus 2.2%. Signaling stronger growth potential that may affect rate cut bets. S&P 500 firms had their best earnings season in 4 years, per Bloomberg, which could support equity valuations. Alibaba's Hong Kong shares surged 19% initially on cloud unit growth and news of a new AI chip, as Nvidia's China exports face hurdles, and investors speculate on Alibaba filling that gap in the market. Live cattle prices have doubled in 5 years, likely due to drought and feed costs, making items like steaks pricier and potentially fueling food inflation. This week's calendar is packed, centered on the labor market, which could sway Fed expectations. Tuesday brings the S&P Global Manufacturing Purchasing Managers Index, where a reading above 50 signal expansion that might strengthen stocks and the dollar, while below could heighten rate cut pressures. Wednesday's job openings and labour turnover survey shows job openings where the last release was the lowest in years, signalling labour cooling, and the Fed's beige book on regional insights like weak manufacturing and modest prices. Thursday brings ADP payrolls, jobless claims, trade data, services PMIs, and oil inventories. On Friday, the US jobs report will be the main event, with payrolls, unemployment, and wages closely watched. Strong results could delay rate cuts, while weak numbers might speed them up. Canada will also report job figures on Friday, which may add pressure on the loonie. In other news, Lamborghini's CEO says consumers are delaying high-end car buys due to tariffs, which might cool luxury sectors. Warren Buffett turned 95 on August 30th, a milestone for the legendary investor whose moves often guide markets. Representative Anna Paulina Luna introduced a resolution to ban Congress from stock trading, aiming for ethics that could build trust in policymaking. OpenAI warned investors that AGI might make money obsolete while raising billions, sparking philosophical debates on tech's economic future. In China, electric vehicles are now cheaper than gas cars, per Fortune, accelerating shifts in auto and energy sectors. Finally, a Chinese engineer hired by Elon Musk allegedly uploaded XAI's codebase to OpenAI before leaving and selling $7 million in stock, per Musk. This raises IP concerns in AI that could affect company valuations. That's today's roundup. Subscribe for more daily updates.